Good evening, guys. It's about 3:40 Pacific time. Today is December 18th, Monday. Hope everybody's well. I'm going to change the format of our daily briefing, and instead of focusing on the broad market, I'll just give a quick update on the broad market, seeing if we did well, we didn't do well, whatever the case might be. But I'm going to focus on the company, give a little bit of background about the company that I'm going to talk about. I know most of the companies that I cover very, very well in terms of the product that they do, the technology they use, their space in the market. And I'm not showcasing that. Instead, I seem to be spending more time just on the market overall. So I would rather not do that. I'd rather just focus on trying to give you guys an update about the company, what the company does, go through the fundamentals, go through the technicals, and then we'll go through the details. Okay. So all three markets did well today. Nasdaq up about 0.6%, 90 points. S&P 500 up about 21 points, 45, 0.4%. And then the Dow, mostly flat, 0.86%, literally non-existent. One of the companies that showed up on the radar is Datadog. Now, Datadog is an observability company. Back in 1990s and then 2000s, you would call these companies as operations monitoring companies or production monitoring companies. So there were a lot of companies at that point in time. This space still has a ton of companies, somewhere in the hundreds or so. There are still a few companies in this space. One of the competitors of Datadog is New Relic. So what observability is you're monitoring applications. So let's say you're a big company, you have a website, you have, for example, let's take a company like Costco. They have a website, they have a lot of applications that their associates use to be able to track inventory, to be able to manage finances, etc. All those applications need to be monitored to make sure that the servers are not down, the application is performing as fast as people expect it to do, and they also are looking for trying to triage and resolve issues. The most three important things you need to do are monitor the performance, make sure availability is high, and then make sure that you are triaging issues quickly. So now the space, because of what we would call DevOps, developer ops related stuff, a lot of companies change. So New Relic is a competitor to Datadog. Datadog provides a solution as well. Splunk bought a company called SignalFX in the same space. Now Splunk is acquired by Cisco. Another competitor is Dynatrace. So all of these companies are in the observability monitoring space, if you will. Let's look at Datadog. So that's what they do. The observability market overall is fairly large, right? Just to give you a little bit of context, this market is growing at about 7 to 11%. And by 2030, this is expected to be somewhere in the range of about nearly 12 to $15 billion in size. So it's a fairly large market in that sense. And if you look at the observability areas, there is systems monitoring, there's observability monitoring for AI, logging tools, Elasticsearch plays in the space, lots of different companies in the space overall. So that's what observability is. Let's look at Datadog. Let's do our 5-step analysis to see what they do well, what they don't do well. And in your comments, let me know if this is more helpful to be able to get a context for the company, or do you want me to go back to my other mechanism, okay, which is to talk about the market and talk about the performance of the stock. So let's look at Datadog from a financials perspective first. I always start with the income statement on an annualized basis to get overall context. That is always the right thing to start with, for me at least. $100 million in total revenue 2017. 8 years later, oh my God, this has gone up 16 times. In fact, in 2023, they're going to do nearly 20 times the revenue that they did in 2017. So this is phenomenal growth. Look at this, 100% growth almost, 80% growth, 60%, 70%, 60%. They're growing phenomenally well. This Datadog is an absolute beast of a company when it comes to earnings. Gross margins are in the 70, 75%. Oh my goodness, that's also pretty good. Operating, okay, so this is where they've been struggling. They've not been profitable, but again, they're growing so fast. They've never really made any money, and their losses have only been increasing. Look at that, from 10 million, 2 million to 50 million. Well, even their losses have gone up 25 times during the period, but these are manageable losses, I think, for most parts. Let's look at it from a quarterly perspective. Okay, revenue has gone to nearly 2 billion. They've slowed down from 60, 70% growth to 30 to 20% growth, probably because they wanted to turn profit. That's my sense. A lot of these companies have realized that their era of zero interest rates have gone. They're not going to get easy cash anymore. This is still a 75-80% margin business, growing at 20% year over year, and they've turned a profit in the most recent quarter, Q3 of 2023. They actually turned a small amount of profit, $22 million. This is outside of the money that they give their employees for stock-based compensation, but this is a good sign. They're actually turning a profit or getting to the point of turning a profit. Look at the balance sheet really quick. Total assets in the 3 billion range, most recent quarter, 3.5, 2.78 billion in current assets in cash, and debt about 800 million, very manageable debt, not a big issue. Do they have enough cash flow? Yes, they have positive cash flow, so that's also a good sign. Let's go to their valuations. They don't have earnings to speak of, even on a quarterly basis. I thought this would have been EPS of some sort, but obviously they're not showing it. This is rich. They've gone back now. Look at this. Let's look at it from an annualized basis. This is 21 times sales. This was 50 times sales. So it's half of where it was, less than half of where it was, but you want to be closer to this 14 range, especially for a company going at 25%. This is rich, but the company has been growing, one of the few companies that have been growing. So this is a quality company. It was probably a little bit, this is a better range to have. 13, 14 is a better range to have, but it's probably not going to go there anytime soon. So watch it carefully. But this is rich. This is pretty rich. For a company going 25%, you want to be in the 16, 18, between 14 and 18 range. Okay, all right. Gross margins in the 80% range, net margins the 4% for the first time again. So I like this. On a scale of 1 to 10, I'd give it a 7 or an 8. Very good, very quality, except for the valuation. All right, now let's go to the next step. On a monthly basis, where does this go? Again, remember our 4-stage method. Stage number 1 is accumulation. Stage number 2 is markup. Stage number 3 is distribution. And then stage number 4 is markdown. Again, another stage 1, stage 2, stage 3, stage 4, all the way to here. So this is probably a good point on the monthly basis to just we'll put some markers in terms of support and resistances, and then we'll get to it when we get to it. So this is near a year-long high. The all-time high is still in the 188 range. This is in the 120 range. It's got some room to go. Doesn't mean it's going to get there, but I'm saying that it's got, and now it is in the stage 2 markup. This was stage 4 decline, did a little bit of consolidation. This is on a stage 4 markup. So if you want to draw a channel, just to be able to make sure that we know this is the channel, should go in this channel. Doesn't mean it will. Let's now look at the weekly chart. So on the weekly chart, okay, so you're going to have to adjust this a little bit more, and I'm going to adjust it down a little bit more just to make sure that it fits in very, very well. And you will find that, yep, this is within the long-term channel. In fact, within that channel, you'll see that this is a very nice upward movement within the channel that is created. The reason why it's interesting is because it's gone past this 118 range and 120 range, 121 range, which was the key resistance point. So had it failed over here, which it probably would have, could have, should have, but didn't. So this would have been a 1-2 multiple top at 3-4. So this gone through this resistance. That means the next logical place for this to be able to have some resistance is going to be in the 135, 137 zone. So it's definitely probably going to get somewhere there, at least by the end of this year. I would think, again, because the market is very, very strong. Keep in mind, sometimes I might tell you, don't play it because the market is not very strong. This market is strong. When the market is strong, play with the market rules. Keep your tight stop, be cautious, but still, when you're making money, make money, right? So I would probably expect it to go all the way to 137, 120 to 127. Not going to be an easy route, just go up and to the right. It might consolidate a little bit over here, but 137 on the weekly chart, that looks like a good point. Where would I put a stop loss to be able to be safe? I would think that the logical point of the stop loss should be where it is right now, right? The 120, 118 zone as well. But anyway, in the short term, in the weekly chart, still going up. It's broken through a key resistance, and the next one looks like in the 137 zone. This might still fail a little bit. So be aware of it. If it goes past, it's already gone past 123. So this is a good point for you to be able to move in, but expect a 137 move to move down. So this is an all-time high. That's one of the reasons why. So this was, no, sorry, not an all-time high. I apologize. This is an annual high. So this is the point where I would put my support, right? So this moves up a little bit down. If you're a long-term investor, this might be 118. So look at this. This is the 118, 113 zone would be a very good point to enter for a short-term trade. But for a long-term trade, meaning you want to buy the stock, look at every time, look at the last 1 year and how it has performed. So if you look at the moving averages, it's above the moving averages, then move below the moving averages. So every time the 200-day moving average, not very well respected. This is not a stock that respects the 200-day moving average very much. It either goes way above and comes down a little bit. So it's now, at this point, it was way down below the 200-day moving average. Seems to have caught up. Now it's all up and to the right. This is still not very stretched, which gives me some confidence. Oh yeah, on the RSI, there's a little bit of divergence. This seems to be moving as well. This is going to go a little bit up, I think. Definitely to the 137 range. My stop loss would be the 117 range, 117.59 range, but expect it to chop and churn before it gets to 137. I like the stock. I like Datadog as a company in the long term, in the SaaS monitoring space. This is one of the leaders. In the software as a service infrastructure space, which is the broader space, it includes Snowflake, Net, which is Cloudflare. Still, in my top 5, Datadog would show up. Thank you very much for watching. Please subscribe to the channel. Let me know what you think. I appreciate it.